Hi, everybody. This is Sean Heidemann. I'm a real estate broker here in the Phoenix, Arizona area. Today I'm recording my Phoenix real estate market report for the month of May, reporting on statistics from April. So it's always a month behind that we're reporting. And we're also reporting today's mortgage interest rates. So let's get started. So this is the market cycle that we've been in here. So since 2001, things were going up, everything was great, and then interest rates went up. So then we had a little bit of a market correction. So we've since May of 22, we've been in, or 23, we've been in this despair. So it's been hope, interest rates went down, and then once again, they went back up, down and up, down and up, down and up. So we're still here in a despair situation where we just don't know where things are going with tariffs and everything. But the old saying is it's best to buy when nobody else is buying, and it's best to sell when nobody else is selling. So despair and uncertainty is actually a great time to buy, believe it or not. It's kind of a reverse of everybody's thinking, but it's a reality. There's statistics that have been done on it where investors have profited from those opportunities. So in the future, we're going to be skepticism, and then hope, and then relief, and then optimism, which is back over here, and things are going to start going up. So as soon as interest rates are down. So Phoenix market, there are a lot of employers, a lot of growth, a lot of things going on. So these are just some articles that like Trader Joe's is a steep closer on opening stores in Goodyear, National Home Builders, West Valley Medical Manufacturing is driving North Phoenix market. Avondale seeks development for downtown mixed use. So there's a lot of development, a lot of things going on here in our market. Doing business in Arizona. So Roche is a big manufacturer. They're planning to invest $50 billion in U.S. expansion in the Phoenix area. So top business facilities are ranked as number one semiconductors here, top 10 aerospace and defense, top best business climate, customized workforce. So all these are different things that Phoenix has been ranked for in 2024. So even though interest rates are up, there's inventories are up. Over time, Phoenix is going to grow because of all the employment here. So, what's going on with the mortgage market? So the bond market, has gone down slightly. So this is where we were on April 11th, and now we're April 29th. This is the latest statistics that we have available. But, so when the bond market goes down, then also mortgage rates follow. So mortgage interest rates as of September 30th is 6.81%. So it's come down slightly since last month, but as you see, it's up and down, up and down, up and down. And so this is where the despair comes in, the first graph that I showed you, as interest rates go up and down. So these are today's rates. So conforming 30-year fix is 6.81. Jumbo mortgage for luxury homes, it's 7.081. And these are national averages. So 30-year FHA is 6.49, 30-year VA, and the best rate you can get is the 15-year conforming of 5.989 interest rate. But home builders are buying down rates, like we've stated in previous videos. So you can pick up some good deals. I've seen rates down as 4.5%, 5%. So if you were looking and willing to go on the outskirts of town, definitely consider a new build home. So this will show you based on what your credit score is. So if you have a 740 or more credit score, you're going to get the best interest rates. LTVs of 80 and less than 80. But if you have FICO score of 680 or less, you're going to have, or 680 or greater, you're going to have higher interest rates. So it all depends on your credit score and your payment history. So inflation, mortgage rates, everything's been tied to inflation. Our inflation is actually pretty good. We're at 2.4% right now. Back in September of 2018, we were at 2.3%. So inflation is actually looking pretty good. So due to the tariffs uncertainty, banks and everybody are keeping their interest rates high. So once that uncertainty kind of dies off, then we should start to see some relief in the mortgage market. Median home sale prices in recessions. So historically, home prices have not declined during a recession. And, this was back in 2008. So that was more of a supply issue. But if a recession is declared, it's not a thing to panic in the real estate market. So 30-year mortgage rates typically do go down in recessions. So once the recession is declared, then they start lowering the interest rates to start improving the economy. So once a recession is declared, which everybody's been waiting for the last 2 or 3 years since interest rates went up, so that's what everybody's waiting for. And so annual sales are down as compared to previously, but that is due to mortgage interest rates. Accepted contracts weekly. Our accepted contracts here is 2025. They are down since the beginning of the year. So that's where the situation is with accepted contracts. Buyer's markets, we've only had a few buyer's markets in the market. So if you are in a position in order to buy, now is the best time to buy before we get back into a seller's market. So this is a graph that shows all the way back from 2001, our history of the Phoenix market. So you see there's a little blip there. We're in a buyer's market there. There's a small one in 2010. The biggest one we had was in 2006 to 2008. And a lot of people got a lot of really good deals during that time. So this is the Cromford Market Index. This tells us if we're in a buyer's market, seller's market. So not every city in Phoenix is in a buyer's market, but majority of them, as you see, the red arrows are going towards the buyer's markets. So the buyer's markets right now are Peoria, Goodyear, Surprise, Queen Creek, Buckeye, Maricopa, Sun City, Sun Lakes, Arizona City, Sun City West, Litchfield Park, Casa Grande, and then these other ones are in the seller's markets: El Mirage, Apache Junction, Tolleson, Avondale, Glendale. So these are some more of the hotter markets in the area. Anthem is more of a balanced market. So appreciation-wise, we are down from last year, 1.9%. The values have kind of dropped a little bit, but we're not going to see a significant drop like it was in 2008. 2008 was caused by a number of foreclosures that couldn't be stopped. It was just a wave that came in, and that's what caused our market to go down. So we have some higher inventory now, but we're not going to see a major drop. So there's a lot of employers coming into the town, and if you buy the home or the property that you're looking at and you plan on holding it long term, then you're not going to see you're not going to lose any money. So it's going to eventually go up in value. So it's appreciation by price range. As you see, the 600 to 800,000 to 1.5 million. They are actually up. Prices below 600,000, that's where you're seeing some decline. And then also 1.5 million and above, there is some decline in the values. So days on market, if you list your home, plan on your home staying on the market a little bit longer. The average in the whole entire valley is 34 days on market. Weekly price reductions are way up. So number of sellers that had their homes listed and haven't sold yet, they are reducing the prices and following the market downward due to the increase in supply that is coming on the market. Concessions, if you're planning on selling your home, plan on paying some kind of concessions, or at least seeing that in some of the offers that you receive. So 50% of all contracts right now have some sort of seller concession. And this is broken down by price range. So between 100 and 250, you're looking at between 12 and 50%. 250,000 to 600,000, it's a little bit above 50, and then it starts to decline $600,000 and below. But if you are listing your home, so just kind of keep in mind that more than likely you're going to receive some kind of seller concession in the offer. So this is the end of the presentation. I'm going to go over a summary here. So the average sales price per square foot. This is comparing April 24 to 25. So it is down. So that's good for buyers. So all these statistics here are basically good for buyers right now. So if I can't urge this enough, if you are in the market thinking about buying, now is the time to buy. Best time to buy is when nobody else is buying. And you can pick up a good deal. If you hold the home for 5 years or more, you're going to be in a good position in the future. You're not going to lose any money. So anyways, if you like the presentation, make sure you subscribe to the button below. All my contact information is under more information. You can reach out to me and contact me directly. Thank you for watching, and please stay tuned for our next video.